Let me now bring on board Prasun Gajri to talk about Indian markets, valuations and where we are headed in the medium term. He is Chief Investment Officer with HDFC Life Insurance Company. Prasun, good morning. Thank you for joining us. Prasun, we've come a long way. Benchmark indices have appreciated more than 10% from the recent low. Even though the fundamental argument has not changed or has not improved, markets both locally and globally have rallied against fundamental odds.
Well, that's the way the markets are. I guess probably earlier every bad news was getting exaggerated. Now that's no longer the case. We seem to have passed that situation. And in the Indian markets, I guess we are really not looking at the bad news in the way we were looking at maybe even a month back. So clearly markets are showing a strong breadth and a good kind of a rally. How it sustains remains to be seen. Clearly a lot depends on the result season. We have had the beginning which has been fairly good, so well begun, I would say. And let's see how it really pans out. I guess I would take it purely based on how the results really pan out.
Prasun, so what's your sense? I mean, in all likelihood, it seems like Fed is going to only taper come next year. Could that spell disaster? Because like you just sort of mentioned, Indian markets have been completely shrugging off any global news and been decoupled the last couple of months.
Look, I guess we were in the months of July and August, we were pretty much had our own set of issues, and we were probably getting just too negative. Whatever the issues which came through in the month of July and August clearly seem to be no longer on the table. Current account deficit is now by almost everyone's viewpoint an issue of the past. Exports have picked up, imports are falling, we have had no major issues on portfolio flows, so clearly that is something which is people are not really willing to, people are not really worried about today. Rupee remains reasonably stable, so probably 60 to 62 range remains where the rupee could settle at. On top of this, there is some news around whether the Indian bond markets get included in the JP Morgan bond index. Now, if that happens, we could have maybe 15, maybe $20 billion of forced inflows. That itself could meaningfully change the landscape as far as the Indian markets are concerned. So I really don't know whether that is going to happen or not, but that's the kind of news market is willing to look at under the current circumstances. If you look at the other macro data, frankly, at the margin, things do seem to be improving. While IIP numbers have been all over the place, but if you look at the real data in September, we have had reasonably good growth in the power generation space. We have had reasonably good cement dispatches. We have reasonably good railway freight growth. So all in all, some real macro indicators are pointing towards that things seem to be coming out of a trough. Now how sharp and how soon the recovery happens remains to be seen. Clearly I don't think anyone really believes this recovery is going to be very imminent or very strong. But the worst seems to be past, and that is something which the markets are taking cognizance of. So, and that is one reason why this entire move has happened.
At 6100, are you a buyer or you would wait for better entry points, and as the year unwinds, this market could give us better entry points?
Look, depends on, I think it's, as I've been saying for a while, I think it's a very stock specific market. I don't think we are trying to take a macro call in this market. And if I really look outside the few sectors which have really gone up in the last couple of years, say the consumer space, part of the auto space, part of the pharma space, and some part of the IT space, I think there is a lot of valuation comfort across the board. And if one is willing to look at those names, I think it is good. For example, banks, I think they were completely beaten down in July and August. We have seen some recovery. A lot of the banks are still not back to the June levels. At the margin, things are pretty much the same, so nothing much seems to have deteriorated from where it was. So clearly, maybe there's some more further scope to move up in that sense. So I would not say that the markets have purely from a valuation perspective completely giving no comfort at all. I think it's more sector specific, or rather more stock specific if I remove some of the sectors which have clearly had the benefit of the safe haven status. Otherwise, I think there is value available. Now, if at 6100 it's still it's a bipolar market. You have the consumer names still going up. You still have the IT names. Yes, the results have been good, but relative to the market, that sector remains expensive. Some of the pharma names do remain expensive. But rest of the market is still pretty okay in terms of the valuations. So I would not be too perturbed, and I would not focus really on 6100. I would rather look at the individual stock valuations.
Some other stocks which are actually holding out of theme, I should say. Some of the agri names are looking pretty okay. You've got a Monsanto which has surged to good 13%. In fact, it's posted its best percentage gain in at least a year's time. It's been gaining for a 50 on the stock, on the trot, and the stock has now hit a 2-year high. There you go, a double-digit rally coming in for this one. 12.5% uptick coming in. 745 is where Monsanto is currently in trade. Prasun, what is it that you are liking out of the agri theme?
But I would not want to comment on individual stocks per se, but clearly, this is this space which has been completely out of favor for a long time now. And clearly the good monsoon, which has been above normal by 5-6%, is clearly augurs well for the sector. And if you couple that with the valuation the sector has been trading at, the rally was pretty much around the corner. So some of that has started to play out, and that has been pretty much across the spectrum as far as the agri stocks are concerned. So I am not really surprised by this rally. And so clearly the focus has been on names which were completely beaten down, where at the margin things have been turning around a little bit. And if there is some positive trigger, that is getting recognized. That's the difference in this market from what it was maybe a couple of months, 2 months, 3 months back, where even when a good news came into one of these beaten down sectors, which was not a safe haven, that was not getting recognized. Today that is getting, market is taking cognizance of that. So I think that's made the world of difference to the way the markets are behaving today.
All right, Prasun, appreciate your time and thank you for joining us.